Everybody, TG Watkins here. It is April 26th. Might need to go back and actually change the date on these things. My OBS was acting up today. All right, then hopefully we are on YouTube and Facebook for Simpler Trading. We're also in the Moxie room, and then yeah, anywhere else we're broadcasting. Should be good. All right, hope everybody's doing well out there. Yeah, we got quite a bit of things to talk about. We've got Microsoft and Google that just reported their earnings. And then, yeah, we had a big day in the market yesterday, and we were definitely positioned well for that. So we'll go through a few things. Anybody out there in the internet world, if you haven't seen me before or anything else like that, come over to simplertrading.com/Moxie, and you can sign up for a $7 trial for 30 days, and yeah, check it out. So if you guys like the way that I talk about things and look at the market and how the Moxie indicator works, if you have more questions, that's where you can come to, and yeah, feel free to ask any other questions that you guys might have. Oh yeah, I was kind of looking at this. The move that we had yesterday, I was like, I wonder if sell in May and go away arrived early. So we are still a few days out from May, and yeah, kind of wondering if that might be the thing that's starting to happen. Now, a lot of people kind of think, okay, sell in May, go away, and then that's that. And nothing happens. In fact, it oftentimes can be a buy the dip situation. So, you know, I think a lot of us are still trying to figure out if this market is actually bullish or bearish. There's a lot of conversation about that. But if things are going to be going up, you know, there tends to be a rollover, you know, starting at May or beginning at May, and then that dip can actually get bought up. So, you know, be a little bit cautious on both sides of the market where we are right now, because you know what? It is craziness out there for sure, and you know, we're going into summer. Sometimes that could be a little bit slow, but don't just think all of May is bearish. And as I said, I wonder if we've kind of started the sell in May, go away type situation given yesterday's activity. Now, leading up to yesterday, we really pretty much saw this coming from a mile away. The market was very, very slow, very choppy for quite some time. You know, we could see right here, there's just a long time, several days, a couple weeks, that the market was just either grinding up higher or just going sideways. Now, what I've been showing and talking about with the Moxie indicator are a couple things, and they were quite clear. So we could see that price was going up on the hourly chart, but notice that the Moxie indicator kept going down every single day. I mean, there was like one little green dot in through there, but what you need to pay attention to, because the Moxie indicator is your friend. It is trying to communicate to you and tell you things that, you know, how it's working and what's happening. And what you should notice is that energy and momentum every single day was going down. So basically, there was a lot of what I call gas in the tank. So the higher the Moxie indicator is above zero, the more gas in the tank there is, the more energy there is. And you have to think about it. Like typically you have to burn off that energy before you can go down. Because if there's this much fuel in the gas tank, you're going to have to exhaust it all. And so in one way, that's kind of what all this was, is price just holding up, chopping around, and you could see that it just kept consuming that gas, that energy, until it finally got to zero and went negative, and that's where we got our break. So the Moxie indicator does a really good job about timing, and you could see that we started breaking down basically right when the Moxie indicator got to zero. Now, leading up to that, this is why I have multiple time frames and what I like to look at, because I like to see the whole picture, because I think it's like a book. It tells you a whole story. And what we could see on the 15-minute time frame is, over the last few days before it broke, you could see that price was basically up over an uptrending 15-minute 50. But then what you would notice here is that the Moxie indicator was, you know, basically below zero. There was one little section right here that it was above zero, but other than that, it was below zero, below zero, below zero. And so the 15-minute Moxie indicator was telling you, like, look, there's not much energy here. You know, even though price is still kind of going up, the energy, the momentum that the Moxie indicator is trying to represent and present to you is just not there. And so you're looking at this, be like, why is price going up, but the Moxie indicator is below zero, and why is price going up, but energy keeps coming out of it? Like, why does this thing keep going down? Oh, well, because, you know, something's about to happen. It's about to go down. And then what we could see here is finally price started to break a little bit, and we got price underneath the 15-minute 50. And not only that, the 15-minute 50 was now downtrending. But there were 2 days right here where price actually moved above the 15-minute 50. Now, this is where I was communicating to the Moxie subscribers. So if you guys are interested in joining the room, these are the kind of things that I'm communicating on a daily basis to the subscribers, showing lots of pictures, lots of education, lots of screenshots. And I actually got some feedback from some new room members saying, man, I really like what you do here. I appreciate the visuals. It helps a lot. And what I was pointing out was that these were both inverse trampoline moves. So let me zoom in on this. And what you can see is that price should not be over the 50 SMA if the Moxie indicator is below zero. So what this told us is that instead of either being concerned, like, oh crap, should I be going long? Like, oh, price is going up. Like, why is price going up? Should I be thinking something differently? And what you need to realize is that the Moxie indicator is really the anchor. It's trying to tell you, like, look, overall energy and momentum is still negative. There's no sign, no hint of strength. The Moxie indicators are spread from each other. That means they don't agree with anything with each other. They're both basically below zero. There is no strength here. So that means any up move should not be trusted. And not only that, you are going against the direction of the moving average. And so you can see that. And then it took a couple days, but then finally we got this thing to break. And we opened with a gap down yesterday, Tuesday? And, not really sure where it's going to go and all that kind of stuff. Okay, is it going to fill the gap? Like, is it just going to drop like a stone? Like, what's it going to do? Well, again, I was looking at the internals and made a post to the subscribers, and I said, look, the internals are pretty strongly negative, like more strongly negative than we've seen in the last few days. And I said, other than a little bit of sideways action, it seems like today's probably going to be the day that this thing breaks out lower. And lo and behold, you can see it broke and ran all day long. And so did that. So as I said, we were positioned for that, worked out well. And then I kind of figured that it was likely to rebound today. Yesterday was a big move to the downside. It definitely hit some areas where you would think that it would reverse. You look around at the other indices, and yeah, they're pretty stretched to the downside. It had been a few days that these things are moving down, and then we had this crescendo, and so they figured, okay, we're at least due for a reversion to the mean or some sort of reaction bounce, something like that. And I think that's what we're getting today. So we'll have to see where this goes. Basically price got really stretched to the downside, and now we see a little bit of a bump and a bounce. Now, it's not an uptrend, maybe near term, maybe on the 5-minute or the 2-minute, sure, you can find an uptrend. But right now, we are pulling back. We're in a miniature downtrend, and we need to just kind of see where this little bump, bounce, bear flag goes, and then we'll have to kind of keep an eye out from there. The other thing to keep in mind is if we look at the put-call ratio, and just keep in mind that the put-call ratio is very low, which tends to mark the top of market cycles. And if the next time that the market's probably going to go up is whenever the put-call ratio gets high. So that could be a little bit. Just remember, it's probably not going to happen after one day. It's going to take a few days until we get this stuff kind of figured out. So let's see. Yeah, Thomas, I'll go through some of that more in detail during the options room session. So I don't want to be giving everything away for free, right? All right. So we see that with the SPY, and then we come over here to the NASDAQ, and the NASDAQ was really one of the bigger things that was communicating to me. Again, if you got to think about, like, what is the Moxie indicator saying to you, right? And so if you have the Moxie indicator and you have the rules, then you will be aware of something like this, where you have price over the 50, but the Moxie indicator is below zero. This thing was, this should have been grabbing you by the shirt and shaking you and saying, hey, look at me, because this was a really big signal. When you see price over the 50, and in this case, we're on the hourly chart, okay, over the 50, and you see the Moxie indicator not only below zero, but continuing to move down, that needs to really say something to you, okay? It absolutely means don't be long. Maybe it means short, but it absolutely means don't be long. The short condition just depends on whatever the rest of the scenario is. And so that I was looking at that, I was like, oh yeah, okay, well that is going to be a problem. Now again, it took several days. The market was holding up exceptionally well, given these signals and what was going on, and then they finally did start to roll over. It took a while. So you can see there was even a big pop up here. So if you saw this signal and you wanted to start shorting it, you pretty much would have had to hang on for a few things because it was a bumpy ride until it finally started going. And then you could look here at the 15-minute time frame and what happened. You could see price started to go down with the 15-minute 50, and you can see the Moxie indicator. In fact, the yellow, they look like lines, but they're dots. The yellow marks that we have here on the 15-minute Moxie indicator, they're what we call power dots. And in a way, you could kind of think of it as the squeeze for the Moxie indicator. It's basically when the Moxie indicators are close together, it means that they agree with each other. So for whatever direction they're going to go, there's generally a strong move that's going to be occurring from that. So that is one way of just kind of looking at it and saying, oh, something's going to be happening, perhaps. But yeah, the biggest thing that was really calling my attention was this inverse trampoline move. Now, Microsoft and Google had their earnings reported, and you could also see that Microsoft had the exact same inverse trampoline move that the NASDAQ had. Go figure, right? Microsoft is one of the biggest holdings of NASDAQ. That and what, Tesla or Apple, Amazon, whatever those they are. But this is also a reason why I don't like to trade earnings, because despite what the technicals say and despite what the indicators say, earnings are a binary event. It is exactly when news and information comes out, and the market is going to react solely on that information. So just because Microsoft closed on the lows and the Moxie indicator was way down here and all these other things, and now here we are gapping up to basically new highs with Microsoft. Yeah, this has nothing to do with the Moxie indicator. This has everything to do with earnings. So this is why I am not, as a stock trader, I'm not a fan of trying to trade earnings. Now, maybe as an options trader, you can set up iron condors, you can sell some spreads and do whatever, and you can play the IV crush and all that stuff. Sure, that makes sense. But for me as a stock trader, it's roll of the dice, really, to do something like that, because this is exactly, this is a darn good example of how does it puke going in earnings and then shoot up? I don't know. That's just how the market works. Tony, let's see. So what moving averages? Well, the red line this is the same for all of my time frames, all of them. You can see that the red line is the 200 SMA. The magenta colored line is the 50 SMA. The orange line is the 21 SMA, 21 EMA, and the 8 is the blue line is the 8 EMA. I say these things so often, so. All right. So yeah, earnings. Hey, whatever they're gonna do. There's just whatever. So be careful about something like this. I am sure there's a short squeeze going on. It's also probably a buyable gap up for the time being. For me, still not exactly a place that I'd want to go buy it for a swing trade. This would be day trading territory, okay? Because typically, after a big move like this, you are going to get some settling at some point, and there will typically be a better spot somewhere along the lines to purchase this for a swing trade if it's going to continue to move up like that. On the flip side, you do need to be careful. Sometimes these gap ups are unsupported, and they will come back down for a while. I think if I show you Meta, this was actually the best of both worlds. So you can see, what did Meta do on its earnings? Massive jump up like that. Was that a great place to enter on a swing trade? No. You got to let it come back down. Now, sure, you could have shorted it too, but what you'll notice is it didn't keep going down. And so this is the thing that, say, for Microsoft, if Microsoft is going to keep going up, you got to find the right spot. It doesn't necessarily mean today or tomorrow. Right at the top, it's probably going to have to settle down. And that settling down can also mean coming back down to a moving average before going up. And in fact, if you look at Meta, what does this look like? Just a straight channel, right? So what happened? You got an anomaly, you got price outside of the channel, and basically what it wanted to do is come back down right on track. So basically, nothing ever changed. It was right there on track, and there was an anomaly. And then it gets right back on trend. So kind of take that in mind, figure out what the trend is, and just remember, we call them reversions to the mean for a reason. Price likes to come back to moving averages, which are the mean, and they like to come back to trend lines, okay? So think about that for Microsoft. Now, the challenging part with any kind of stock trading is that what is that trend line? Is it really going to be as clean and simple as as this? No, not always. It could be, huge oscillations like this, but again, it's in a trend. And I think even if I show you, since I'm thinking about it, my charts are a little bit slow sometimes. Well, I was going to show you the semis, SOXX, on the way down, because in there we go. Let me see if I can get over here. Oops, SOXX. Yeah, so look at that. You guys see that trend? And you can see basically for as much as the semis moved all over the place, what did it do? It really just stayed between these trend lines. Okay, so if you guys are new to trading and stuff, these are some things to pay attention to. If you can start recognizing what channel it is or what the trend is, then you can make some better decisions and trades. Don't be selling here, don't go buying here, that kind of stuff. You can figure out where these oscillations are. Brighter side, good to see you, man. Let's see, UVXY. Possibly, yeah. I've been watching this, and there was a first move. And we tried taking it. I was a little slow yesterday. Should have jumped on it yesterday. But we were looking at it right around here. We made 2 trades, got out for about a % gain, and then it was the weekend, so I didn't really want to hold over the weekend. But you'll notice look at nice double bottom, and then we hit a spark, and it shot up for there. So, oh, and where did it go? Brighter side, can you guess? Exactly to the daily 21. Go figure, right? So there you go. Yeah, that worked there. So if this is working to be bullish, the daily chart is doing the elf shoe pattern, which you know. So this is the arch of the foot, and we're looking for price to come back down. And what do we have on the hourly chart? The other reason we've been watching this and, again, prepared for the market to pull back, like we were expecting this, is because we're starting to get some positive divergence on the hourly chart. And then yesterday was the first day that the UVXY broke over the hourly 50. Notice back here it did not. It got to the hourly 50, but wasn't able to break through it. And then here, I think this was Friday, it got to the hourly 50, couldn't break through it. But yesterday, it did. So yes, there does seem like there's some stuff going on, and that we need to be paying attention to it. Also, Nick, look at this, right to the third ATR, huh? Like right there. So all the same rules, all the same things that I talk about, these things fit. So yes, and then Thunderfin, you were talking about the VIX products. I think you were saying, let me go to that next, but you were looking for the VIX to pull back and looking for a spot to go long in the VIX. I don't know. I don't watch the VIX too much. I much prefer watching the UVXY and making my decision based off that, and watching the market and basing my decision off of that. But yes, Brighter Side and Thunderfin, if we do have this start to come back down here and at some point starts to hold and then move back up, yes, I would expect that there should be a second move, because we are starting to set up to where we do have price over the hourly 50, which we have not had in several weeks. The Moxie indicator is now above 0, which we have not had in a long time. We are setting up for a bit of an up move for the UVXY, which means we're setting up for a down move, a pullback in the SPY, in the market. And we know that because of the put-call ratio. We can see this clearly with the positive divergence of the Moxie indicator. And yeah, it just looks like something's happening. Now, I don't know how far this will go. This is the thing that we always need to kind of think about and figure out. I don't know how big this is going to be. Is the UVXY going to make a huge move? Does that mean that the market's going to roll over and make a huge move to the downside? Or is this going to be pretty much contained to where, we got a big move down in December, but the UVXY did not respond. And that was because apparently the market knew that it was going to go up in January. And all it was doing was pulling back in December in order to get its position right and go up. The UVXY did not move on the down move in December for the market. Okay, now we did get this, and that was kind of that banking crisis that happened, I think in February. So now we kind of have to figure out, okay, well, how big is this going to be? And we don't know. The UVXY can act strangely. The market could move down, but maybe the UVXY doesn't really do much. So I always call it a kind of a weird rubber band. The UVXY is definitely just a weird rubber band. It is not linear to what the market does. Sometimes it works, sometimes it doesn't. So It's a tricky one to play, but I do like to watch it just to help give me a little bit more information. Let's see. So we got the UVXY on that. Yeah, so we're looking for a pullback. Remember put call ratio, all that kind of stuff. Let me see. Go back to Thomas. Let's see. How is Microsoft daily still in a squeeze? Well, I assume it because if it's a daily time frame. Okay, so you can even see. I mean, look at this. Let me get my cursor right here. Look how long this was in a squeeze, even for how much that was moving. So the squeeze is based on the Keltner channel and the Bollinger, but the Bollinger bands. There we go, not Bollinger charts or anything. So Bollinger bands, and you have to think that when there's a lot of volatility like this, a lot of movement, those Bollinger bands are expanding, and that's how the Bollinger bands work. And same thing with the Keltner channels. So you can see here I have the third ATR Keltner channels here. And you can see because price is moving so much, those Keltner channels are staying wide. So however these things are working, that because there's so movement, that a squeeze might actually still incorporate a lot of movement. Does that make sense, Thomas? So a squeeze will also maybe show up sooner and actually turn off or fire sooner if the behavior of the particular stock is more calm. Because the Bollinger Band will be more likely to get inside of the Keltner channels sooner with a stock that has a narrower range. But when we start getting a lot of expansion like this, both of them are expanded, and you can get that squeeze, but then you can also stay within the squeeze based on big moves. So it's kind of the nature of what's happening right now is we still have a lot of big moves, and so it's still just within it. Yeah. Okay. Gold. Basically, I think gold is flagging. Now, the part that I've been trying to figure out, we took one little position on it, is basically what's next. I do think that gold overall is going to go higher. I think gold miners are going to go higher. I think precious metals in general are going to go higher, like down the road. But this was a really big move that gold just had. And if you look at some of the gold miners, they've been some really big moves. Well, what happens after big moves? They need to calm down. They need to get digested. Things need to settle down. These things can't always just go straight up for forever and for a long time. So they need to calm down. Now, the perpetual question always is like, well, how far down do they need to go? Or are they going to go sideways? And then when are they going to take off? Well, that's where our tools and skills and experience come into play. What I was able to do is basically say I called that top. And I called it with GDX, and you can see the same thing with Moxie indicator. It's right there, okay? So the Moxie indicator also did a pretty darn good job calling that top. You could also see it called that top right there pretty well too. Now sometimes it gets a little mixed. You can see right in through here it was a little mixed. It didn't go down, it just went sideways, but it did also call the beginning of that next trend. So the Moxie indicator does pretty well with that. So what this is telling me right now is we're still kind of in chop. We still need to kind of hang out more. And I just don't know if it's going to go down to kind of digest the move or if it's just going to go sideways. But I have a feeling that we will generally see it coming. So even here, when the Moxie indicator was down, all this stuff, you'll notice that there was a point at which, right there, that the Moxie indicator actually stopped going down and started going back up. And you would notice that price really was just going sideways. And it was staying above the 21. It was staying above the hourly 200, all that kind of stuff. And so what we need to do is kind of watch that currently. Well, where are we at? 21, 200. Moxie indicator's not telling us too much yet. So price could continue to move down, but I do think that generally I think it's going to be resting. It's just trying to find its next area of support, and that takes time. So I would be bullish on gold. I would not be shorting it. But we just have to kind of wait to find the right opportunity for it, and we'll just have to see when that is. So keep giving it a little bit more time. And if we look at silver, basically the same thing. Now with silver, when we got here, there was a pretty big pullback. Gold didn't do this. Now silver did. How do we know that silver was going to do this? How did we know that silver was going to break below the daily 50? Well, it's all on the hourly chart. Look at this. Do you guys remember at the beginning of today's session when I was talking about that inverse trampoline move on the NASDAQ? And I was like, this better grab you by the shirt and shake you and say, pay attention. because inverse trampoline moves mean don't go long right now. They might mean short. Again, it depends on the context, but they definitely mean don't go long right now. And so what you could see was, even though price kept trying to pop up, pop up, pop up, what was the Moxie indicator doing? It was persisting and staying below zero. And that was finally what caused, and then you could even see the 50 crossed below the 200. So you were losing your moving averages. Your moving averages actually were starting to cross underneath each other. And then for whatever reason, you got this gap to the downside. So that's the difference between silver dropping and gold flagging. You know, gold actually started to recover. The Moxie indicator started to recover, and you got a Moxie indicator price trigger on the hourly chart right as price started that next trend up. But you never got that here, and the Moxie indicator did stay below zero. So that was one thing we were able to kind of watch. So you can see here we do have that Moxie price trigger to the downside for silver. Okay, well, silver is very far away from its moving averages. I would imagine that this is probably going to need more time, or it could even go down to kind of fix this overbought situation. So I would definitely give silver a little bit more time to hang out, and we'll have to see where it wants to go. So again, I'm not sure I'd short it. I mean, you could. This was a pretty decent short, but I don't know if that's going to happen again. And really, I think this thing's in an uptrend, so I'd much rather just kind of wait and look for those uptrends to begin as opposed to trying to short anything. All right, Tesla. I think Tesla just kind of keeps going down. Tesla's been challenging, I'll tell you. You can see here, this pattern and this pattern were almost identical. So Ben, what you can see here, this is a little bit of a fake out. You can see that Tesla originally bounced off of the daily 50, then failed the daily 50. Bounced off the daily 50, failed the daily 50. So same pattern, same failure. But it was definitely tricky in between. Now, again, talking about the Moxie indicator and the inverse trampoline move that I'm telling you, like with silver and with the NASDAQ, what happened right here leading up into earnings? Now, again, a caveat, technical analysis will just go out the window based on earnings. Anything can happen for earnings, like Microsoft, you know. The Moxie indicator was saying down, down, down for that. But I will say, you know, this one called it right, or at least the trend was correct. You had price flagging sideways into a downtrending hourly 50 with the Moxie indicator below zero. So if we didn't know that earnings was here, this one actually worked out. And so you can see it dropped on earnings, and it's just been continuing down. So there's really not too much to say about this. You know, apparently the market's not happy with Tesla's earnings or what numbers or whatever else it said about it, and it's been sinking. Now, at some point, even in a downtrend, things can get a little bit oversold, and there will be a bounce. And I would kind of be leaning towards that. At some point, this thing is starting to get a little bit stretched. It's sitting down here. It's a little bit stretched on the downside. Same thing here on the hourly. And at some point, there's probably going to be a bounce. Now, is that bounce going to be like a bull, new bull run? I don't know. Could just be a bounce in a downtrend. So however you need to play that, just be careful that, after a few big down days like this thing where it just kind of keeps going, there typically is a bounce or at least a bear flag. So yeah, just kind of careful on that one. All right, guys, I'm going to be leaving it there. And for anybody else in the Moxie group and seeing in simpler trading, I will be back over in the options room in 30 minutes. So ask me your questions again. I'll answer, and we'll definitely go deep dive for the hour on that. Anybody else out there, you can check me out at simplertrading.com/Moxie. And yeah, come check it out. Hope you guys have a good time and staying safe out there. Thanks again. Talk to you.